Tomorrow from both Canada as well as the United States, with the bigger risks coming from south of the border, perhaps. Let's get some perspective on this and how the data might impact the currency markets. For that, we're now joined by Adam Button. He's the Chief Currency Analyst at ForexLive. Adam, nice to see you. Thanks for your time.
Hi, Catherine.
Let me get your take, and just so our viewers, and I'm sure they are well aware, but your company, you analyze currencies across the globe, and that's your product for your clients, for retail clients to use.
Yeah, it's ForexLive.com. It's a retail website, and we analyze news really as it's happening. So once the jobs report's out, we're kind of on top of it, breaking it down. Or if there's any unexpected moves in the market, we're calling around to figure out what's going on.
So let's start with what you are expecting to see tomorrow.
Well, yeah, the two jobs reports come out at the same time, so that always makes it difficult in terms of the currency market reaction. In terms of this report, the Canadian economy has been so strong for so long in terms of jobs that even a big miss here is going to be shrugged off on the Canadian dollar side, whereas on the US dollar side, it's very uncertain at the moment. So you're going to see that in terms of a bigger move in the US dollar and a bigger adjustment on that side of it.
And with respect to the U.S. uncertainty then, because of course that has an impact on the Canadian dollar, which way are you expecting it to move? Are you expecting to see a good jobs number out of the United States tomorrow?
Right. I'm a little bit optimistic about the U.S. I mean, the ADP number this week was a little bit soft. ISM services was a little bit soft in terms of jobs. So there are some downside risks there. In terms of looking at it from the market, 160,000 jobs is what's expected. Anything between 100,000 and 200,000 is kind of that sweet spot. Whereas if you get something stronger than that, the market's going to start worrying about the Fed not cutting rates as much, and you'll see some dollar strength. Whereas if it's weaker, you're going to start to see the market get into a little bit of a panic about the economy and some U.S. dollar weakness on that, and more talk about Fed cuts.
Adam, I think some people are surprised that the Canadian dollar has found some momentum and some strength as of late. What do you attribute that to?
It has been an unbelievable run, because if you look back 6 months ago, Canada was kind of the ugly duckling out there. And the Bank of Canada kept saying, this is just a soft patch. We think it's going to rebound. But they really didn't have a lot of credibility on that point. But they have been absolutely right. Canada has really stormed back. And if you look at currencies, it's all relative. And Canada has been ultra strong relative over the last 3 or 4 months. It's been data point after data point that's been strong, and the rest of the world has really fallen off. So that's given this Canadian dollar a big lift, but the market's still reluctant. I mean, it seems like a lot because the Canadian dollar's been down or stuck in a range for so long, but it hasn't moved that much. And I think there's still a lot of reluctance about the consumer from Canada that hasn't really participated in this better economic sense.
Well, and when you talk about the Canadian economy being strong, is it really strong, or is it just better than deceleration that we're seeing in the United States and Europe and China?
That's right. There's strong, and there's relatively strong. And it's kind of relatively strong. You know, the consensus for this year is still 1.4% growth. And that's not anything that's really getting anyone excited. But it's kind of ticking higher at the same time. We could easily get to 2% if a few things start to fall into place, maybe on oil or housing or the consumer. Whereas elsewhere, it seems like it's starting to crumble a little bit, in U.S. manufacturing and other countries, Europe especially, are slowing down. So it's just that Canada's headed in a different direction from the rest of the world. And it's very hard to square because the concerns are global trade and global growth, which are things you would expect to hurt Canada.
Right. What are your expectations then as we look at trade tensions and how that may or may not impact the Canadian dollar? Which direction is it going next?
Yeah, it's on a run here right now. I don't think there's anything to stop the Canadian dollar for another couple cents, up to 78 cents from around 76 and a quarter now. You know, a lot of this good news is just starting to filter through into the currency market. And I think the consumer can turn here. We saw this hiccup as mortgage rates pushed higher and people started to look at a 5% mortgage, 4 or 5%. Now we're back well below 3% on a 5-year fix, for instance. And I think consumers are going to start to spend and feel a little bit better about the economy. Combine that with a potential change in the government and perhaps a better situation in the oil market, and you start to see a lot of growth into Canada, up to 80, 82 cents. And I don't think the global picture is as bad as feared. And especially if the Fed and the ECB start to cut, well, that's going to be global growth that benefits Canada as well.
When you take a look at currencies, of course, money flow is always so important in terms of the direction in any currency. What are you seeing right now regarding foreign exchange traders or pension funds or what have you actually buying into the Canadian dollar? It doesn't seem as though they're there yet. What are you seeing?
Yeah, that's the good news. I mean, you talk to people and they have just washed their hands of anything Canada energy related. I mean, they are done, and that can only get better from there. I think Canada, what it's missing is really a story to tell. There isn't a theme that you can attach to Canada that is going to bring money into Canada until we maybe get to interest rate differentials, and that's where the Bank of Canada comes in. But it's kind of this quiet, steady economy. And that might be what wins out in the end as others start to fall off.
So would you then be a buyer of the Canadian dollar at these levels? Sounds like you would.
Yeah, absolutely. I think we haven't really seen something like this in quite some time for the Canadian economy. That it doesn't feel great, but it is better compared to what else is out there. I mean, the European bond market is just racing to new highs right now out of fear. And the Fed, we're talking about 50 basis point cuts, 3 cuts before the end of the year. And Canada's kind of on the outskirts of the trade war as well, now that NAFTA has been basically sorted. So there is a lot that's going right for Canada. And if a few more things like oil and gas or housing start to improve, there is upside and even more upside in the Canadian dollar, up to 82, 84 cents in a year, 6 months.
That's the most bullish by far I have heard, Adam. I'm going to have you back to talk about that on my program. Just last question here. What else would you either be buying or selling?
I think sterling is starting to get interesting. Brexit is so overdone at this point. There is potential for a bit of upside from a very low base there. And I think the other one is gold. I mean, we're in the midst of a global central bank easing cycle. The last time we were there, gold got to $1,900. I don't believe that central banks should be easing as aggressively as they are, but they are. And as long as they are, gold will continue to rise.
Okay. Adam, we'll leave it there. Great to speak with you today. Thanks so much for joining us.
Thanks, Catherine.
Thank you. That's Adam Button. He's the Chief Currency Analyst at ForexLive.